The sky is not falling yet. The S&P has been surprisingly strong. And even though when you look at the CNBC Fear and Greed Index and it tells you that options are in extreme greed, I think it's important to note that when we actually look at the option volume, we're actually favored on the puts on the market. And we have been since here. On individual stocks, the market's been really bullish, especially since we kind of had this trend right now where every time NVIDIA rolls over like this, if you pair this with IWM, you're going to see that it rallies up when NVIDIA is rallying down. It's almost like money is, kind of filtering from this, the prodigal child of the market to some of the smaller stocks, which then kind of broadens out the rally as SPY, which pretty much trades sideways over the same time frame. I would expect this pattern to continue to play out. And if we actually look at, how options are positioned, keep in mind that when people buy puts, market makers sell puts, and then they usually hedge with shares, which continues the rally to the upside. Okay, they hedge themselves, making themselves more bullish. And then as those contracts roll over, then they end up buying more shares, causes the market to continue to rally to the upside. Another way to kind of describe how massive amounts of option trading are causing the market to act in weird ways is going to be this charting right here, showing that this is actually the most volatile the market's ever been as the automated buying bots reacts to the option trading that goes on the market. Because remember, options trading has been persistently high ever since COVID, and it stayed that way, which is causing the market to act in weirder and weirder ways that it hadn't pre-COVID. So I'm looking at this right now, and I'm getting concerned, right? Because I was expecting the market kind of turn over. I think a lot of people were. Right now, we're kind of eating it. Now, did have some saving graces. The Jets play that was set up has done really well. Coin play sold that too early, but it's playing out really well. Our Bitcoin charting is playing out to the dot. Looks like we're getting that final move to 42,000 before we roll over. I think coin will be extremely volatile when Bitcoin starts to roll over. We'll keep, moving our Fibonacci's up as it continues to rally. Look for that 0.618. Still looks around the $100 target is where I'm hoping we'll get a drop to so that I can get back into this position. I don't want to FOMO into it at this point. Not enough risk reward to do something like that. But we also had great calls on Disney, looking to get bullish on this when it has a pullback. What was the other play that did really well? On railroad plays for Discord members, that was some great returns. If you were a little bit earlier than me, got over 100%. I think I got like 60% on that play as well. We're able to short Google this week. That was a really great trade. Now, Google looks like it actually wants to bounce here. And if we look at these technicals, though, it looks like even though the 1 hour looks like it wants to fire and we're seeing the RSI improve, looks like maybe we could get a bit more downside and test this 130. I'd really like to see this 130 get tested and then get long on a potential bounce here, and just pretty much just giving in to the way that this market wants to continue to rally. Probably shorten up, actually, my time on a lot of these contracts, do a lot more scalping on this market and not continue to fight it. Because if you get a breakout right here, and I mean, if we look at futures right now, it looks like I'm gonna get some good exits, but I'm gonna use this as an exit. And if it continues to go down further to the downside, I think a break below 454 is going to be below that chop zone that we held for like a full week. That's where I'll start to get really bearish. We break below here. Yeah, about 453. We get below that, then I'll start to get really bearish, start to reset up plays. Right now, I'm going to be looking for exits. I don't want to fight this much longer. Even though we found ways to make some money right now, this is kind of killing me. I do want to point out that gold's been insanely bullish right now, and I'll be looking to chase this some. Futures have been really profitable again, just like last Sunday. We're seeing futures spike really hard, and I think this is going to cause a lot of buying here. I am definitely looking also at gold miners because that's been lagging the actual gold trust. Typically not what you see. Miners are typically going to be outperformed. Could have a lot to do with liquidity. Liquidity's been really weird in this market right now. A lot of people think that this is, good fundamentals, Santa rally. If you actually look at the amount of volume on the market right now, the amount of volume it's taking to actually move this market. Liquidity plays a huge role in this, right? I've been talking about low liquidity environment. Typically, it takes about 50 billion up to 80 billion to move the market in any direction. Right now, it's about 30 billion that's moving the market. It doesn't take a lot of money. It doesn't take a lot of incremental buying from people just passively buying the market with their 401k to move it to the upside. And it just doesn't seem to be a lot of selling pressure. I would expect that to pick up heavily into January, or maybe even mid-January if this continues to persist higher. I mean, if you're going to break out to all-time highs, who knows how much FOMO is going to be in it? Who knows? Maybe you get a scenario where the market continues to rally up and then people are like, oh, the Fed succeeded at a soft landing, and people give up on the puts. They're all burned out. Because everyone's kind of buying up the puts right now. You see them throwing the towels, and then like mid-January, you get complete capitulation of the market, and it just craters. Not out of the question at this point. I'd say it's fairly likely. I've seen some people talk about that. Sounds about right to me. People might wise up before then, especially since it's pretty obvious that this isn't like fundamental moves in the market. This is pure price action, pure mechanics at play right now. But that's really going to be on my radar. One other trade that I want to talk about is Goldman Sachs right here. This looks like a great breakout right here. You know, it looks like you've tested this multiple times. We've seen in the past how this has given some great returns. And it looks like we got a wave 1, 2, 3. So, you know, looking for another $5 move right here that could play out this upcoming week as people start to chase this. I really like that one. It wouldn't be hard to believe it actually goes a little bit higher than that, because you can kind of set this up in different ways or on longer time frames. I'll be watching that one this week as well. And Tesla's going to be another one. We've been looking for this 332 break right here. I think that could easily play out as well, especially since there's been a lot of senators even buying puts on Tesla. I think that's pretty concerning, especially since they're the ones that, you know, do legislation on these companies. I don't know what's around the corner, why they suddenly want to buy puts on Tesla. Could be the same theory that I had, where it's like, hey, X just lost a bunch of its advertisers. Elon might likely sell shares to continue to fund that project. He said in a recent interview that, you know, if it fails, it'll be because of the advertisers. So I don't know if that means he's going to sell more shares or not. He's probably just doing the smart thing and just not openly saying that he will, which is smart, but it should be concerning. Oh, the last thing I guess I want to mention for this weekly report. Sorry, this is just one go because it's super late. I need to get this done and out. TLT this is crazy. This is absolutely crazy. You talk about big money trades. I mean, this was my largest position. I wanted to continue to buy until the end of the year, but I also wasn't expecting the bond market to have like a historically bullish move. This move doesn't really make sense. I don't want to buy more of this now. I am selling. I have started selling as of last week, and I will probably continue to sell because this is turning over with the market, and this is too much, too fast. This has been a fantastic trade, and I know I have so much duration on this trade. But when you have a trade that's supposed to take 12 months, give you over 30% returns, and the first two, you start taking profits because this is going to bounce some, and I'll probably continue to do this for the rest of the year. But this is a crazy move out of the bonds. It doesn't really make that much fundamental sense. I don't think the Fed is likely to do any cuts here soon. So I'm not looking at this as like, oh yeah, this is what it should do. No, it shouldn't have a move like this. So I'm using this as an opportunity to take some risk off. And let's keep in mind, by the way, let's talk about that. So let's say for theoretical purposes, don't pay too much attention to these lines of just trying to paint a narrative here. Let's say we come to January, market does something crazy, goes to like 480. We see a retracement down to like 450, get a small bounce right here. People try to get bullish again. Then we do this like A, B, C pattern to the downside. On an election year, I wouldn't be surprised if there's political pressure to stimulate the market into an election year from the current party that's in power. The Democrats want, it doesn't matter what party, by the way. They both typically like to have the market doing well so they can maintain power. So people are happy. Oh, I'm rich. I'm in a good mood. Everything's going great. I wouldn't be surprised if that completely negates a lot of the fires that are going on around us. It wouldn't shock me. And I mean, just to summarize all of that, it means next year could be even crazier than this year. And I'm not going to make any big predictions about next year, other than Fed will eventually probably cut. And it might even come from political pressure. They might not even have to break anything. Markets just might perform poorly. I know some people are also talking about, we've had several people in the Discord talking about Evergrande as this big thing because on December 4th, they've got to do blah, blah, blah. I just really, first of all, when I see someone type something like a full essay in all caps, my brain just kind of turns off and says nothing. That must not matter, because people who post about things that actually matter don't post in all caps. Also, we've heard about Evergrande for like 6 months. For like 6 months. Probably even longer than that, now that I think about it. It's probably more like 9 months at this point. The market has been aware of this. If that's not priced in at this point, I'll be flabbergasted. Anyways, that's it for this week's report. There's your plays. Make some money. Be great.